So staying with us on the news at 1, sovereign wealth funds are being seen as a possible solution to solving South Africa's financial and economic problems. A sovereign wealth fund consists of pools of money derived from a country's reserves set aside for investment purposes to benefit its economy and citizens. These funds act as overseas investment and saving vehicles which may affect exchange rates, inflation and economic growth. A 2011 PwC report says setting up a sovereign wealth fund may help to reduce inflation and lessen exchange rate appreciation. It found that in countries like South Africa with a floating exchange rate, there's a close link between the presence of a sovereign wealth fund and a weaker exchange rate. A weaker exchange rate may help boost other aspects of the economy, such as exports. The report also found that sovereign wealth funds may help improve transparency in an economy. Sovereign wealth funds gained prominence following the global financial crisis after they helped recapitalize the world's largest banks like Morgan Stanley and Merrill Lynch. For more on this, I'm joined by Dumat Kubule, who is a director at the Centre for Economic Development and Transformation, as well as South African Institute of Race Relations Chief Economist Ian Cruikshanks. Perhaps I'll start with you, Mr. Kubule. South Africa has dabbled with the idea of a sovereign wealth fund. We haven't had one up until this point. Some would say that it's because we've got a current account deficit and a budget deficit, and we simply can't afford to be thinking about things like a sovereign wealth fund.
Thank you. Most countries always have budget deficits, but I think I should make a point is that there's two types of sovereign wealth funds. There's one, for example, that is related to the currency and the reserves that you're talking about. So in China and many Asian countries, they accumulated reserves to keep their currencies artificially low. So in China, they had fixed their currency at around 8 renminbi to the dollar for many years to support their export drive. So they were, every single dollar that came to the country that accumulated into these funds. So at one point they had $4 trillion in terms of these foreign exchange reserves, and there was pressure in the country that they should use these reserves to benefit the people of China. So what they did, they set up a sovereign wealth fund called China Investment Corporation, which now has $800 billion in it, and they set up two other smaller ones. So the purpose of the first kind of sovereign wealth fund is to prevent, as you said, currency appreciation. Now that has got relevance for South Africa, because what we've seen in the last boom is that we didn't benefit, according to my view, as we should have, from between 2001 and 2008. Mining GDP in mining countries increased by 5% a year in most mining countries, and in South Africa we decreased by 1% a year. So one of the reasons I saw for that is that our currency was strong during that period of the boom, and what we've seen right now is that as commodity prices are increasing again, we're seeing currency strength. So what economists refer to that phenomenon is called Dutch disease. Now the second type of sovereign wealth fund is the one that you see in Norway, where they keep all the income they get from their oil into the sovereign wealth fund, which now has $1 trillion worth of assets. Now I think that we need to have a sovereign wealth fund in South Africa, but the Norwegian example is too extreme for a developing country, because they put everything they get from the oil into that fund and they live off the interest. So I don't think that's feasible for developing countries, because they need to address immediate issues like poverty and inequality.
Mr. Cruikshanks, perhaps I can bring you into the discussion and ask you what your thoughts are on a sovereign wealth fund and whether we could afford to do it now and how.
Affordability, that is the key word. We don't have the reserves at this stage to be able to say we can allocate funds to a sovereign wealth fund. It's like going to the average person and saying we must have a savings program for you. First thing one asks is, have you got a mortgage bond? Pay it off first. If we want to have a sovereign wealth fund, let's pay off our debts. Let's not have these overhanging, which could cause damage to the economy, to the stability of the currency, to inflation, and all sorts of factors which we are now hoping to overcome. So I don't think that we were ready for it. I think that yes, we do have an export, a balance of trade surplus, because our exports have been doing well because of the higher commodity prices. But until we see that we have stability, we don't have rising debt, which is rushing at us at a frightening rate at the moment. I simply don't think we're ready for it. But in the long run, it's something we should at least prepare for, because after all, it's not that long ago when we did actually have a budget surplus. If we are determined to move in that direction, which will mean a lot of hardship and scrimping and saving in the meantime, then I think there is a chance that we will get there in the long run. It's a good plan. We're not ready yet.
We're speaking about the lack of affordability. You've said perhaps there's other things that we can look at that may be able to help us afford the sovereign wealth fund.
Yes, okay, so let's talk about the first sovereign wealth fund. We do have 600 billion rands in terms of foreign exchange reserves. That's number one. Number two, what I've proposed is that the public investment commissioners, the corporation, and the IDC have got currently assets of about 80 billion rands at the end of 2016. I think these should be ceded to a sovereign wealth fund. These assets are about 15% of the value of South African assets, which were about 600 billion rands at the end of 2016. So I believe that is one mechanism that we can use to gain more benefits for South Africans of these mineral reserves. I just want to make one quick point. In 2011, our mineral reserves were valued at $4.7 trillion by Eco Partners. That was 31 trillion rands, 600,000 rands for each South African. So what I'm saying is that we need to have a better return from this God's endowment, if I can call it that, for all South Africans. And the last thing I want to say is that South Africans should understand that the mineral reserves beneath our soil, they don't belong to the companies that mine them. They belong to all of us South Africans, and we must see more of a benefits. In terms of financing that, I really believe that one way we can, so once we've got this 80 billion rands sovereign wealth fund in South Africa, we can list it on the JSE immediately, and we can support it to get more public involvement in the ownership of the mining resources by giving a portion of our current royalties towards that sovereign wealth fund.
Thank you. Duma, I must say that I think the Governor of the Reserve Bank would take a lot of serious issues with you regarding the function of the Reserve Bank's reserves, and I think that they are not there to be used for the benefit of all and sundry. Well, they will in a way, because they can be utilized to stabilize the currency and hence stabilize inflation. But these are primary targets, and I think to say, well, look, let us rather tempt the population as a whole by saying, so much of it is yours for each person. That's not quite so. I think that's taking a shortcut that we shouldn't do. It goes against what I would call sensible economic theory.
I wasn't saying, so there's two things, Ian. There's the foreign exchange reserves. I was just pointing out that China has invested a portion of its foreign exchange reserves in a sovereign wealth fund.
Yes.
That's number one. Number two, how we should fund this thing, I said we should cede the assets of the PIC and the IDC, less than 5% of the assets, towards the sovereign wealth fund, and that is a decision, a political decision, that's got nothing to do with the Reserve Bank. And I believe that's one credible way, well thought out, funded way in which we can set up our sovereign wealth fund.
Mm-hmm.
Let us start with the PIC. Remember, those assets aren't government assets. Those are primarily the assets of the Government Employees Pension Fund. The beneficiaries of that fund are the pensioners of South Africa. So one can't just say we can cede those elsewhere. They're not there to be ceded. They belong to those pensioners, and it's their right for them to be invested where they're likely to have the liability in due course, which is probably here in South Africa. So I think one has to be pretty careful about comparing China, as you said, with I think over $3 billion worth of reserves, and South Africa with $40 billion worth of reserves. There's a big difference in what we can utilize to create the stability, which I agree we do need. We really do. But I think with the political and other influences on our economy, on our markets, in the time being, we need to stabilize those factors before we can go on to saying, now we have savings in the bank. Let's decide how we're going to allocate them.
Very briefly before we go.
Okay, quick one. The PIC. We've got 2 trillion rands of assets in the PIC, and that is about almost 50% of our GDP. I think it's insane. It's obscene to have such amount of assets that are not working for South Africans. That's number one. Number two, the PIC, the GEPF, the Government Employees Pension Fund, is a defined benefit fund. So the benefits, when the value of the assets goes up and the value of the assets goes down, it doesn't affect the pension that is paid out to the members of the fund. So what I'm trying to say, because it's a defined benefit fund, the funds actually do not belong to the workers, they belong to the government. But that's an issue for another day.
This is a discussion that seems like we need to carry on a little bit
forever.
longer, but we've run out of time. That was Dumat Kobule from the Centre of Economic Development and Transformation, and Ian Crookshanks from the South African Institute of Race Relations. Thanks both so much for your time.